everyone, welcome to the market update. My name is Kay Kim with the Traders Club, TwoTradersClub.com. Today is June 16, 2017, Friday. Welcome. A happy Friday. Hope you guys had good week trading. I'm going to cover a lot today. Everything you see on your left here, right? Spider, Diamond, Russell, Financial, Qs, Semi, Transport, Apple, Amazon, Facebook, Tesla, Google, Netflix, Gold, Silver, GDX, Treasury Bond, IBB, the Biotech, and the dollar and oil. I'm going to go through all of that. I have this energy today. I just want to kind of release it, and I'm going to go through them rather quickly. I know I always say I'm going to analyze these quickly. Sometimes it goes much longer than I anticipated. So feel free to get your pop or tea or whatever you want to kind of sit back and relax. And you have a whole weekend to really watch this. So hopefully these videos is helpful to you as I publish these market update videos on a weekly basis on Friday. Market is still open, so you will see flashing lights on your left. Market should be open another hour and a half. This is kind of a late midday as I publish this video. So as always, this is my blog here, TwoTradersClub.com. The best way to connect with me if you want to make sure to get my articles and videos like this on your email inbox so you don't miss it, is just go to here, TwoTradersClub.com, and go to article alert, and you put your email address, and you can always make sure, so if I publish anything like articles or videos, anything like that, you'll get it to your inbox with the link so that you will never miss anything of my new published articles or videos. So looking at Spider here, we had another gap down today due to dividends that were paid. I don't really like these dividends that gets paid, and it kind of ruins my chart. I had to adjust this a little bit. If I actually go to cash, S&P 500 cash here, S&P 500 index itself, not Spider ETF, you can see this is my old rising pivot, and the 20 MA. I've been talking about this level for some time now. So if we just go to S&P 500 index, the cash market here, you can see that 20 MA continue to act as support, right? See that it has acted as support here, and then resistance, back support, came down, and then been acting as support. We're actually still staying above this 20 MA, and you can see we are still holding above this rising pivot. Looking at this here, if I actually go back to Spider, the S&P 500 ETF, with the dividend that was paid this morning, came down here. So we are below the 20 MA on this chart, but I just kind of slightly adjusted this here, connecting these levels here. You can see resistance, support, and support. But really same sentiment. We're still in this kind of a range here. We're still retesting this level. We're still kind of in this rising 20 MA vicinity. I would have to say as of today, we're a bit bullish to neutral, looking at the Spider in the minor term sentiment. Obviously intermediate term bullish, primary term bullish, but in the minor term we are bullish to neutral sentiment here. As long as this gap, right, this is a real gap that actually happened 2 days ago, as long as that downside gap remain open, I would expect some turbulence and some shenanigan, like, a lot of up and downs, kind of a lot of gap up, gap down, kind of volatility throughout the day. So I expect some more turbulence going into next week, unless we see fast bullish move here and fill this gap quickly and continue to rise higher to the upside early next week. If not, if we kind of fizzle around here and then the gap remains unfilled, I anticipate a lot of up and down volatile market going into next week. If we lose this level, I am open-minded for this to potentially come back down to 240, 239 and retest that rising 50 MA here. I think as this thing starts to come down, probably meet with that 50 MA, and that's the potential level of support. So that's kind of what we're looking at here, looking at things on the daily time frame. I'm just looking at my other screen, see if there's anything else I want to report to you guys. Nothing much. Again, primary term trend is up, and this is not a time for a crash talk. And I know I talk about this every week, but trend is up. We're gonna have a pullbacks. That's what the market does. Goes up, comes down, goes up, comes down. That's what we call an uptrend, guys. It goes up and down as it continues to cultivate higher lows and higher highs. So I remain bullish in the market, but if we lose these levels here and the 20 MA, I am expecting and open-minded for a pullback to about 240 and 239.76, and we'll kind of revisit that next Friday. Let's look at Diamond here. Dow Jones Industrial Average still holding up quite well here. A little bit of a bull pennant pattern you see. You can see right there, similar to something like that. A little bit of bull flag right here. So it's been really, you know, a stair-stepping, kind of a perfectly. Is actually really in order when you look at Diamond here. Excuse me. I'm just getting a sip of my hot tea here. When you look at it, it's not as volatile when you look at Dow Jones Industrial Average. We're kind of turning, you know, we're just perfectly rising higher above that, you know, the price staying above that rising 20 MA. I'm sure if I throw a 10 MA there, I'm sure the 10 MA has been what it has been acting as support. We've been throwing these bull flag and then move higher. We threw another bull pennant and then move higher. We're throwing another bull pennant. Really, though, these patterns are really, I would have to say 50-50 because we're in a minor term uptrend, maybe 55 to the upside, 45 to the downside, because I've seen these patterns fail. So really, you don't know until this thing either, you know, move to the upside or fail to the downside. But currently, though, we are kind of looking at these kind of a bullish pennant pattern, which can break on either direction. If it does break lower, I'll look for that 20 MA as a potentially next support. You can see that 20 MA acted as support last time here, and it does have a quite impressive resume. It acted as support here and here. Again, looking at a minor term in here and acting as a resistance here, act as support there. So 20 MA is quite a it's an important level to watch if you want to gauge this thing in a minor term perspective. If we do continue lower, I am open-minded for this to possibly retest 211.24 if we do see kind of a stronger sell-off. If not, again, 20 MA is the next support, or if we break out of this bull pennant, it potentially move higher. Actually, Dow Jones Industrial Average has a little bit more bullish sentiment compared to, in the minor term, compared to Spider. Let's look at Russell 2000. Russell 2000, we're still in this range bound. This is what I've been calling the rising channel. This is overall bullish sentiment for this market. This is not a topping pattern. This is more of a consolidation of pattern. This is a continuation pattern. If we look at things in a big picture, with a big bullish move, consolidation for 6 months, and then before resuming back up. But looking at things more of an intermediate term perspective here on the IWM, Russell 2000 ETF, that gap, right, from a few days ago here, it remains open. Same scenario here, same thinking here is that, same logic here is that as long as this downside gap remains open, things could be a bit hectic here, right? Last time, kind of same thing happened here. We, let's see, which one was that? No, actually, like right here, you see this gap? That gap remained open, and things really did get hectic there. I think we are dealing with a little bit more different sentiment than here and here. I think I talked about this last week. Let me reiterate. We pretty much broke out of this and went straight up, and we hit that resistance right here, and it tanked. Same thing happened. We broke above this resistance, it went straight up, hit the resistance, tanked. Well, this time, we broke this resistance, but instead of going straight up, it cultivated. What I mean by cultivated, we actually have an uptrend. We have these higher lows and higher highs, right? You got low, higher low, higher low, higher high, higher high, higher high, higher low. Meaning it didn't go straight up. We actually been building, cultivating this minor term uptrend. Therefore, I think there's a little bit more bullish strength into this uptrend as long as we hold some of these levels here. I think the worst case scenario, it needs, if it continues further down, it needs to hold 138. And there's a 50 MA coming about 137.56 as of today. there's a chance if it continues lower, it kind of meet with that 50 MA. Because 50 MA did act as strong support here in that vicinity, possibly going higher. The worst case scenario for this minor term sentiment, the pressure to be still bullish, it needs to stay above 138.50-ish should the price continue to decline. But for now, we are holding this level at support at 139.70. I bet if I do a little Fibonacci, that's probably going to be the first level of Fibonacci retracement, and this can potentially be viewed as some sort of a bull flag type of pattern. We did see something like that happen here and again here. So potentially be, and again, we are holding up in this potentially be could be categorized as in a higher low vicinity. We don't know that until we break higher. So I think again, if we continue to stay below this falling gap, things could get hectic. For the buyers, what they need to do is we need to get up here and maybe this support could be acting support and fill this gap and then continue march higher. Otherwise, things can get a little bit more hectic on the Russell 2000. Let's see how it plays out next week. We'll revisit next Friday. Financial holding up so much better here. We're holding. Obviously, we broke above it. We've been talking about this inverted head and shoulders. Because of that inverted head and shoulders, we have nullified this topping head and shoulder formation, which we've been talking about for months. We cleared above this falling resistance right here. That was a level. And then we cleared horizontal resistance. And now it looks like potentially be some kind of a bull pennant type of pattern here. Potentially will break higher or break lower. I think it's 55-50, 55% break to the upside, 45% break lower. If it does break lower, it needs to hold above 23.84. 20 MA is residing at $24 at this point. If this thing pulls back, I believe this level would have a strong support because this was a prior resistance. And that's what happens. Inverted head and shoulders, break above the neckline, comes down, hit the neckline, retest the neckline, and then break higher, and there will be a full confirmation. At that point, it will probably get up to 25.17. So if it does pull back, those are the levels I'll be watching for potential strong support on the financial. Let's go to NASDAQ here. Actually, let me zoom out on the NASDAQ. You can see this has been a strong level of rising pivot channel resistance. It was a prior resistance, act as support, now retesting it. Just a little bit of a, maybe a left shoulder head, right shoulder neckline, but we've seen these patterns fail. If this pattern is going to play out, we need to see this thing breaking below it, right? And then retesting it. And then falling over, because how many times you see a little blip and then goes right back up, right? How many times you've seen something like that comes down, goes up, do a little bit of invert head and shoulder, it comes back. So it's not enough to just break below it. We also have 50 MA in that residing in that vicinity. It needs to come down and retest this as new resistance, and then if it falls over, there's a good chance it's going to come fill this gap and kind of retest this rising support, right? And so, those are the things to watch out for upcoming next week here. Also keep in mind that 20 MA is starting to act as resistance now. You see that my 20 MA is modified, just to let you guys know, it's on high setting. So my 20 MA is on high setting. If you want to put this on your chart, it's my 20 MA on Spider Dow I've been looking at today in this video. Is a 20 MA on high setting. So the 20 MA here, kind of all around it, we found support here in that vicinity, and then you can see it is acting as resistance there. So I think as long as the price below that level, I think minor term sentiment is quite a bit bearish. Though again, intermediate term bullish, primary term bullish, run uptrend. But I think we're kind of holding this level, which is important level. Once we break it and retest it and gets failed, I think there's a good chance it will come down to about 133 to fill that gap. But if you hold that, needs to get above. If you're buyers here, this thing needs to kind of do something like that for potential to move higher. Let's go to semiconductor. A similar scenario, though we're actually not really lining up on that, but we are below the 20 MA. You can see that falling 20 MA there. kind of a declining there, so we're a little bit of minor term bearish sentiment because it did act as support there. And you can see right here, last time we hit that 20 MA to the downside, we did see this thing coming back down to the channel. That 20 MA been acting as support all throughout early 2017. We lost it, came down to where? Came down to 50 MA. You see that 50 active support. You see, you gotta love technical analysis. I mean, if you just paid attention to semiconductor on 20 MA, 50 MA, you'd have banked, right? I mean, you would have known when to place your tighter stuff if you're more of a short-term trader or swing trader to 20 MA. If you're more of a longer-term position trader, you know that to add on this 50 MA. And if you did that, I mean, you would have did very, very well here. So 50 MA does have impressive resume. You see that we found support here on this day, April 13, and then December, November, and August of 2016. So it's a strong resume, it's a strong support. So if this thing come down, that's a level to watch, which is coinciding with that vicinity there. And that's the level to watch if should the price continues. Again, we're still below declining 20 MA there. So that's the minor term or bit weakness showing up to semiconductor. Let's look at transport. Transport 20 MA. Again, 20 MA has been that star, really. It's you can see that 20 MA acting as support here, acting as support there, and yesterday continued to rise here. Minor term sentiment is bullish on the transport as long as we stay above that level. We cleared this resistance, we broke out to the upside, and we are kind of doing a little bit of a a little bit of a tight range here, just like something like this with a tight range here. So these are kind of it goes up, consolidate a little bit, go back up, consolidate a little bit, go back up, consolidate a little bit, potentially go higher. However, if we do lose this level, next level supports of 167 and 165. And I'm sure if it continues to lower, the 100 SMA and the 50 MA will come down, meet that level. That's probably a strong level of support should the price continue to lower. Let's look at some equities here. Let's look at Apple. Apple, 20 MA. Again, 20 MA has been the star of this video. 20 MA been acting as support here. We lost it, came down, and now we're losing 50 MA on Apple, right? 50 MA. We haven't touched 50 MA on Apple. Excuse me. Since back here, early December of 2016, this is the first time we hit 50 MA, and we saw a little bit of bounce, quickly lost it. 50 MA slightly declining at this point, and the gap has been filled. You can see this gap right there has been filled, and a lot of times when gap gets filled, it becomes instant support. So we're kind of hanging around, potentially a bear pennant. That's the level kind of coincident with that 100 SMA there. So right now, that gap remains open. This is a bearish gap. Could potentially be a breakaway gap if it doesn't get filled quickly. As long as the price below this gap, things get hectic here. Even this thing gets back up, that 50 MA is pulling back. It did act as resistance. Buyers got up trying to fill this gap, failed. Not even able to get up to 148 for a gap fill. It actually just kind of stopped short at that 50 MA, and it is pulling back a little bit, and then price came down a little lower. So even if he pulls back, 50 MA is a level to watch for next level of resistance. If he continue lower, obviously we got some supports here at 140.55, but strong support won't be until 134, 133. So that's going to be a strong support where if this thing continues to lower, lose that 100 SMA. Keep in mind that 100 SMAs also have a strong resume where 100 SMA active support here and here. So if we lose 100 SMA, again, don't be precise with the 100 SMA. It's the vicinity that's important. Just because we get slightly below it, oh my God, it's going to be short. It's the vicinity that is important. It's the rising aspect of the 100 SMA is important because there's a good chance we could find some support in that vicinity. What I'm worried about, though, looking at the Apple here, just the structure-wise, if this thing starts to find support here or comes down a little bit and then gets up, and then it comes down to that 50 MA and then fails, we're going to have this head and shoulder formation. And if that happens, for sure we're probably going to come down to about 133, even lower if we get a head and shoulder, maybe even to 128. 128 if this thing does see that head and shoulder formation. If not, If this thing kind of gets up and maybe do a little bit double bottom, continues higher, there's a good chance that we could see something like that if we can see a strong bounce with some kind of reversal pattern on Apple. So keep in mind, so I think the 50 MA, the gap here is a level to watch. As far as a pattern is concerned, you know, we're not there yet. We don't even have the right shoulder yet. But if the right shoulder were to form, then there's a good chance that there's could be a much more decline to come. So I'm watching this. I don't have any position on Apple, but we'll revisit next week, see how he plays out there. Let's look at Amazon. Amazon, wow, we saw a big gap up. I didn't see this until now, so that pretty much seals the deal for the shorts here. It just pretty much gapped up here above. We're above 20 MA. We found strong support. So you can see 50 MA acting support here. Let me stock like Amazon. You know, just because it's moved up so much, a lot of people think that it's going to do something like that. It's maybe will. It's just a very, very difficult to call tops here. It's a very difficult endeavor trying to look for the top. You know what I mean? And I wouldn't go long here either, just because it's, you know, so I have been avoiding Amazon, but I think swing traders, day traders, short-term traders, overnight day trader, I think they've been profiting from this, just kind of trading every single day. But looking at this more of a minor term perspective, we're back above 20 MA. That's a good sign in the minor term. We're back of 50 MA. That's a good sign in the minor to intermediate term. As long as this gap remains open, the sentiment is bullish. The Amazon, is it stretched? Yes, it is stretched. It is overbought, and I'm not sure where the top is, and I don't want to figure that out. Facebook is holding this level. This is a strong prior resistance level here. We've got a little bit of double top, but that's the important level to hold for Facebook to, if Facebook buyers want to see continuation to the upside, you can see right there. But keep in mind, sometimes these things do occur like this, where it seems to be holding right here. You see this right there. It is resistance, 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 resistance. We broke above it. Looks like a retest continuing higher, but it fails hard before kind of trapping both longs and shorts, because a lot of shorts probably shorted down here, and before it, you know, establishes another trend. You can see that Facebook has another channel that it has developed, and now we're back at it like this. So the question is it gonna break and then come back down to the channel, kind of trapping the longs, or are we going to break from here and then move to the upside? I think the level to watch for you to see as a confirmation is this level here. This was a prior resistance in the short term. 20 MA is in that vicinity. You want to see this thing holding above. If it goes higher, just want to holding above and move higher for this to continuation to the upside. However, if it gets rejected, falls back, break this below this, you know, that channel resistance support area and below the 50 MA, then this thing could get pretty quick sell-off to about 133 here. Keep in mind though, 50 MA did act as support last few days, or a week or so actually. So if we break below that, if we do something like this, could be a strong sell-off if we do something like that. But again, it's hard to tell as of today. We're sandwiched between 20 MA and 50 MA. I think so. Those two moving averages will be key. Let me just double check I think my 50 MA is at. Oh, so my 50 MA is also modified on source low. So we got the low 50 MA and high 20 MA. I don't do this all the time. I'm just trying to accommodate current market environment too, and so I modified these two moving average to accommodate current market sentiment there. Let's go to Tesla. Tesla got a little bit of a evening star reversal candle there, but just to call top just because evening star is tough call. The gap still a little bit remains open, but if we're not able to get new highs here, potentially be something. We are extended on the weekly and the monthly, but doesn't mean it cannot go higher. It needs to pull back. The trend is up. Again, I would watch that. 20 MA still rising here. But we got this bullish gap. So we got that gap. I think as long as the gap remains open, I think the minor term sentiment is bullish. But I think that evening star may be something, but sometimes it's really nothing. So if we gets above it and nullify it, there's a good chance it could continue to grind higher. Let me just look at, on the weekly chart, it is extended, and we're getting into overbought sentiment on the weekly and monthly and daily also. So we made some consolidation potentially, and then maybe waiting for 20 EMA to catch up. But so far, Tesla still looks bullish, but it is extended overbought sentiment there. Let's look at Google. I want to really zoom out on Google and just kind of give you guys perspective of what Google, how Google moves. Really, it's really, that's why you really want to study its personality of the market. You can see last time, you see that. This kind of stuff happens a lot of times. You know, the chasers, the market chaser, the buyers, the longs, the immature, amateur, the untrained, unseasoned traders will chase that, and then the market brutally punish them, and then it comes back down to the channel. The smart people know that this is a good level of support because they like the support here. They buy it, boom, right? So this is why I hate breakout plays. I don't know if anybody ever tell you just breakout plays is good. I guess it's good for you know, day traders, swing traders, short-term traders, but I hate it because I'm a long-term trader. Same thing happened here, broke out, it tanked, but it tanked to where? The 200 SMA, and then it moved higher. Same thing here. You can see we broke out. I think this was earnings. Got up, but what happened? It came down, retested where? This prior resistance. This would have been the level to buy the dip, not chase this, right? And then we had a pretty strong move and then retested it again, got up here. So now we are back at this juncture where we broke out of this kind of a, you know, rising wedge. A lot of times, again, the textbook says rising wedge is bearish, but a lot of times it could be 50-50, especially if it's in a rising uptrend. It could be 55-45. This time it broke higher. I think that was earnings though, and now we're kind of hanging out here. So, you know, for me, I don't want to go long here, but looking at this here, where we're sandwiched between 50 and 20, kind of that's kind of has been the theme throughout. 20 MA is acting as resistance, 50 acting as support. So if we lose 50 MA, there's a good chance we kind of retest that. So if we don't find support in this vicinity, then there's a good chance to come back down to retest that 100 SMA. However, if we find support there, then there's a good chance we continue higher. But we're sandwiched between here, maybe a little bit of a tiny head and shoulder formation. But again, head and shoulder formation has not been confirmed. It needs to break below the 50 MA. Got the left shoulder here, head, right shoulder. If it does confirm, that means we'll probably get back to that rising pivot or resistance channel support there, right? So, but for this to continue higher, we need to get above the 20, reclaim it, retest it, and then if we do something like that, there's a good chance it could march higher. Are we extended on the weekly and monthly? Yes, but doesn't mean it cannot go higher. Where is the top? I don't know. Nobody does. Trying to pick top, it is the hardest endeavor. That's how you're gonna break your account. Looking at Netflix here, Netflix is in this channel that has been strong resistance. We found resistance there, came down. That's also the pivot there, but it has been acting as strong support. Is it a good level to buy? I think if you're shorter term, I think it might be a good level, though we do have this gap there, still hasn't been filled. So I mean, it could be in this area, could act as a resistance there, and then you got the 20 MA falling. So for me, no. But we are finding some support. We got the 50 MA here, 20 MA there. So there's a lot of resistance there. I don't want to go long here because monthly, weekly, we're kind of dealing with the... I just saw something on the weekly on Netflix. Could be a little bit concerning signal here, just a little bit. It's not like strong. It's a little bit of that. It was strong here. This is a bearish divergence. That's a strong bearish divergence. A peak, higher high, lower high. But we got a little bit of that here. But it's not really bearish. I mean, you can see it's just not so much. We got a little bit more on stochastic here. And this one obviously strong bearish divergence. That's a strong bearish divergence right there. But this is it's there, but it's not as strong as like back in late 2015. So I don't think that it's gonna, like, you know, that's what happened in 2015. After that, this thing did that. So I don't see that kind of stuff happening. But we got 100 SMA holding here, rising support. Let's see how it plays out there. 100 SMA to hold, and then we got 50 and 20 there on Netflix. Let's go through these. Gold, you know, again, I've been talking about this. I don't want gold. I don't want to be involved in gold to the upside at this point, as long as we're below this level. I mean, attempted. I talked about it a few weeks ago. We got slightly above it, but man, this thing really needs to get above 124, 123 for me to start considering to go long. Yeah, when I say I go long, I don't mean for a couple of weeks. I don't mean for a couple of days. I don't mean for a couple of hours. I mean for months. I mean to get some kind of move like this. I don't want, doesn't mean I'm going to go long if it clears 124, but I would start thinking about considering to go long around 124. Below that, still bearish. We're still below this long-term downtrend resistance, as you can see. We're just finding some support here. We do have a kind of a rising, we're a little bit like trapped here. This is no man's land. I don't want to do anything around that, in that vicinity. Let's go to silver. Again, silver is still bound by its downtrend resistance. We're still in a primary term downtrend. Really, there's a lot of shenanigan happening here. That's why it just gets up, down. We're not getting into like this deep primary term option. We're just getting in this short-term pops and falls, right? This thing needs to get above 1787 for me to start thinking, considering to go long right there. So let's see. We're below the moving averages. We got some gap to fill. I think next support here and here. So those are the level to watch. GDX. Again, GDX looks the worst out of GLD and silver versus GLD and silver. We're well below that falling resistance, and then it got resistance of its own in the intermediate term. You can see right there, just really lagging. It started to get heavy here, and moving averages just everywhere. It's just really range bound last 6 months or so. Really no man's land for me to get excited. You know what? I'm not even gonna make that red. For me to get excited, for me to really thinking about going long and being serious about making some serious money on GDX, like I want to look for a move like this. I don't want to start considering it until it gets above 2069 and needs this thing below that. And again, I've been talking about it for quite a while. Let's go Treasury bond. Treasury bond holding up well here. It's breaking above this falling resistance and rising pivot, and this gap still open. That's a pretty sizable gap here. There's a good gap. As long as the gap remains open, I think it's a bullish sentiment in the minor term. We have uptrend higher lows and higher highs, so we got a little bit of bull pennant type of pattern there. It could break out higher or it could break lower. There's a chance it could come down, maybe fill the gap and then go higher, but I think overall we're on a bullish sentiment here. Potentially we're potentially seeing a major bottoming signal, like something like here or somewhere here. But it's not going to be easy move where it's gonna have a shake and bake. I mean, you can see when it start bottoming, gonna have these kind of up and down movement before it makes its move. So let's see how it plays out there. But it's a good. It's holding up well here, and rising pivot holding up. The gap looks good, still holding up. So let's see how it plays out. Let's go to Biotech. I know I haven't covered Biotech in a while, but this is a major level at 302. You see a lot of these head fake. This is, again, like I said, I absolutely hate these breakout plays. I hate it. I hate it with my passion. I hate it. I mean, because I think most people like it because they want to do a quick trade. But I mean, these breakout, it's just, I want to make sure it gets in a trend, and so I can ride the trend. I mean, do you really want to get little pops here and there? Do you want to be able to ride this? I mean, what's more fun? What's gonna make you more money? Is you wanna get little pops here and there, or do you wanna be able to ride that for 6, 7, 8, 9, 10 months at a time, or a year or two? So for that to happen, obviously, this is what I'm looking for. What I'm really looking for is this. Okay, this thing must get up, pull back, retest it, and then go. That will be the most safest strategy. In that, you might even see this just wide inverted left shoulder, double head, double top, double bottom head, and then right shoulder. I don't know if that's gonna happen. Sometimes it just goes straight up, right? But right now it's been really zigzagging. It just creates its highs and then pulls right back, gets high, pulls right back. So what I want to see, I think, there's a good chance it gets up and then pull back and then get up. You know what I mean? So that's potentially B. I would also watch this resistance here right there. So not only, where is it? Not only there's a horizontal pivot, but that's also the level to watch because it could be kind of stuck there for a while, right? So it's just no man's land. I wouldn't really pay attention too much at this. The problem with the dollar was we have kind of a concerning signal here. It's this bearish divergence on the monthly. That's not a good look here. And that last time it happened, actually no, that's not. But here, that's bearish divergence on the monthly chart. That's a bit concerning. Let's go back here. But let me see. Weekly chart though, we are oversold, so there might be some quick pop here. That's pivotal level. Do we have support here? No, but we can still connect these right there. So we got that. We're a little bit of, well, it's been a chop fest here. You can see it's just, again, you got that, and then we made all-time or new highs, and then came right back in. Potentially be something like that, but we're just kind of holding up. A lot of these kind of holding up pattern isn't such a great pattern. Many times where you can see right there, it held up and then just died. But regardless, we are kind of an oversold, so we might see some pop here, but we have these moving averages starting to cross down. That's a dead cross there on the excuse me, on dollar. This was a golden cross. Market moved higher. This was dead cross here last time, and that, you know, wasn't such a great idea for bulls, where it started to chop fest. And the trend changed once we started seeing this. So we got a little bit of a bearish connotation here. See how he plays out there. Lastly, and I'll let you guys go, USO, we're seeing a little bit of bounce, but you can see you got all these resistances there it's dealing with. We're bouncing a little bit, but we feel this gap. I think we feel that gap. So yeah, that was a gap there. So I think there's a, let's see, let me look at, on the daily we're oversold. Weekly could go a little lower. So I mean, there's a chance they could get up here a little bit and then fizzle around. Obviously, in a downtrend, where can we call bottom here? Nobody can call bottom here, right? So for this thing to really make its move, needs to kind of get up 11, 12. But for now, there's a lot of resistance there. A lot of the new low today. I think that's a 52-week low. Nice, yep. So we printed it today. So that's we may see a little pop here back up, but there's still a lot of bearish sentiment going on here. So I'll look at one last time spider and let you guys go. Let me see what happened here. Market should be on the open another hour. As I'm finishing up my video, it looks like we're holding that level, and so we got a little bit of hammer there. But again, going into next week, just you know, I would look for you know, below, as long as that gap remains open to the downside. I think that turbulence could continue higher. But if we do see a follow through though on Monday and to the upside off of this hammer, there's a good chance we'll fill this gap. But once that gap gets filled, could be another turbulence until it kind of settles down to the upside. Have a wonderful weekend. Good luck trading next week.